Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm joined now by Steve Sjuggerud, the editor of True Wealth Opportunities and Daily Wealth, and so many other publications in the Stansberry universe of publications. Steve, I wanted to ask you about the state of play for the term melt up. This is a term, a catchphrase, if you will, to describe what's been happening at the end of the last bull market. It's something that you are largely credited for inventing or popularizing. And that bull market, of course, just ended before the pandemic, and now it's roaring again. The stock market crashed thanks to that bull market that I'm talking about. But as I mentioned, now it's kind of moving higher, right? So are you making the argument now that we're actually seeing more of the melt up?
Absolutely. I mean, we never really reached that point of true melt up where it's just a frenzy and everybody's crazy for stocks, and you go to a family gathering and your brother-in-law is telling you about how much he made in some stock you've never heard of, and your cousin's thinking about quitting their job and just trading stocks. I mean, at the peak of a melt up, it kind of feels like, if you remember in 2008 when everyone was just invested in real estate and people were quitting their day jobs to flip houses. But you had to know that if population's growing at a couple percent a year or whatever it is, that house prices can't go up 20% a year to infinity. It makes no sense at all, but that's what was happening for a couple of years there in Florida. But people at the end of a melt up, they are willing to just completely disregard reality, and they don't want to hear that. They don't want to hear the rational analysis of what's happening. And I don't feel at all that we are at that point yet. I think that people are still fearful. Oh goodness, is the economy going to survive coronavirus? What's going to happen with the airline? Are we ever going to go to a concert again? Is there going to be a second round of COVID? Like, I feel like investors are more fearful than greedy right now. And at the peak of a melt up, it's all greed and no fear. That's the day the melt up peaks, is when there's no fear left. So what I wrote, you said, Steve, you kind of coined this term, the melt up, and I'm sure that I popularized it. I'm sure that hundreds of thousands, if not millions of people first heard it from me. But when I first started writing about it, my point was, I said, the Fed is going to cut interest rates lower than you can imagine and keep them there for longer than you can imagine. And that will cause stocks and other assets like real estate to soar higher than you can imagine. And that's exactly what happened. And then COVID ultimately hit, and now the Fed has once again cut interest rates to unimaginably low levels. And the same could happen. You mentioned last time we talked, the Fed said they were going to keep rates low for a couple of years. I mean, this is just 0% interest rates force everyone to figure out something else to do with their money. Like, if you thought, oh, I've got $2 million and I can live off the interest of that. If I earn 2.5% a year, that's $50,000 or whatever. But if you have $2 million saved and interest rates are zero and you're earning zero, you can't live. I mean, doesn't matter how much money you have. You have 10 million, 100 million, 0% on whatever amount of money you have is still zero. So you are being forced to do something else with your money. And stocks are where a number of people are going to find themselves. But that's a rational decision. And we'll start seeing rational decisions of money moving into stocks, but then it'll reach an irrational point pretty quickly. And we're starting to see some of that. Are you familiar with Robinhood?
If there are signs of the end times, is Robinhood on the path to the signs of the end of the melt up?
If you were at a poker game, they say, if you don't know who if you don't know who the dumb money is at the table, you're probably the dumb money at the table, And, I don't play a lot of poker, but I get the idea, right? If you're at a card game and you can't figure out which one of these guys doesn't belong, it's probably you, right? And so I think of Robinhood as kind of that guy at the poker table. You've got all these pros ready to take everybody else's money, and then the novice investor from Robinhood shows up, and he thinks that he's going to outperform all of these guys. And in a melt up, like we saw in the dot-com boom in 2000, 1999, the Robinhood style investor was making a fortune, completely by luck, really. but it kind of fueled that, the absolute ultimate heights of that melt up.
So we've had you talk about the melt up, and I guess the physics of a melt up is that there has to be a melt down after a melt up. So how far would you say we are away from that point where the tide turns?
I still think we're a long way, because there's still plenty of fear, about a second coming of COVID and all of these things. There's still plenty of fear in people's minds, and interest rates are still extremely low, and they'll stay low. So, we're just igniting this thing with 0% interest rates. So, we may have 18 months of really good times in stocks. We'll continue to reevaluate in my letters where we are in this thing, how much longer it could go, if it's shorter or longer than that 18 months.
Is there anything based on history that can help us figure that out?
Yeah, absolutely. We follow a lot of melt up or meltdown indicators in my True Wealth letter and my True Wealth Systems letter. And based on history, exactly, that's what we look at. Now, there are occasionally things like a COVID event, we call them black swan events in finance, where, you just can't see them coming. And these things happen. And so COVID really hit us out of the blue. No one predicted it, and the market did crash quickly. But under sort of a normal circumstance, which there sort of is over history, like the NASDAQ, the dot-com boom and bust, or the real estate boom and bust from like sort of 06 to 2011. There is sort of a life cycle of these things, of like euphoria to despair. And, we haven't hit euphoria yet. And then there's a long way to finally reach that despair. We track these things, and there are objective ways for us to determine the subjectiveness of euphoria to despair. And we follow those indicators and share them in our True Wealth letter.
I think about people with a long-term investment horizon. They have more runway to ride this roller coaster. What are the things they need to be thinking about? And then conversely, somebody who's, very close to retirement. If you know that you're close to a meltdown, do you have to invest differently?
In the short term, I would like to be long stocks. I would like to own stocks. But in the long term, when you're talking about these longer term horizons, what could you own in a meltdown? I think that I'm a fan of real estate. And I'll tell you that, 3/4 of my own personal investable net worth are in Florida real estate. So if you're asking, is my money where my mouth is? And when I tell you that real estate is where I want you to be for the long term, Florida real estate is where my money is. And this is what I've done every day as a job for a very long time. So I think real estate will be a very strong way to ride out the meltdown.
All right. Well, I know that you have a new product specifically geared toward helping people invest in real estate, and they can find that on Stansberry.com under your name. Usually just look for your face. You can find out more. And if you would like to find out much more about any of Stansberry's products, you can certainly subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for watching.